In reality, we'll have some sort of line of credit that's like 6 or 8% that we can just tap into, that it actually decreases. But if it works like this, it's gonna work even better with the actual numbers. You know what I mean? So it's kind of like once you run these type of things, you do like a test fire number, and then if the dog hunts with those, then it's a deal. You know what I mean? So this is what this is. So this is what's calculating down here. Total cash that's gonna need for each of the deals, um, and then it breaks it down. The monthly interest payment, the points that we pay for that, and then underneath it has all these calculations here that we can spend a little bit more time on it once we're doing a stack offer that's gonna go through. So the exit for this is more like long term. We'll do like a wrap or a rental. So it's what I like to call cash now, cash flow, and cash later after we sell. Like our purchase closing cost, 2 grand. Our holding cost through the entire project, 4 months, 3,200. What are we gonna pay on interest on capital, 11 grand. What we're gonna pay when we sell, 5%. I need to change this to 4, but I kept it as 5 as conservative, and then it's just a little extra bonus. And then our estimated gross 46, estimated net 35. All in, we're gonna be at 208, and then 17% is the return on a whole deal in a cash, using all cash, not calculating finance. The annualized return is 60%. Since we're doing it in 4 months, if we were to get that same type of return during 12 months, you would equal a 60% return, right? So Warren Buffett, he's the greatest guy, greatest investor, right? I think his average is 27%, if I'm not mistaken, something like that, return. So we're getting a 60% return. Now he does it with billions of dollars. We're only doing it with $208,000, right? So it's very hard to get a 60% return on billions of dollars. But just comparing, you know, somewhat apples to oranges.
Serious security.
Yeah, but you can kind of get the idea. Like this is a really good investment.
Yeah.
So it's pretty secure. That's why we are able to pay really good returns to our investors. Because at the end of the day, we're doing a 60% return. We're paying them anywhere between 12 to 20% return. So there's still a spread.